And we're getting grades like 1,066 gram per ton silver over 3 meters right at surface. We're getting gold up to 8 grams right at surface. And no sign of drilling at all.
There's a long list, a very long list of assets. Is there a kind of machine process to this, or you just kind of make it up as you go along and make decisions as you go along? Hello and welcome to Crux Investor. First of all, thanks so much for watching the video. If you like it, remember to give us a thumbs up at the end, and do leave your comments below. It helps us understand the sorts of questions you think we should be asking, how you think we've done, and of course what you think of the company. And you can get all of this as a podcast on cruxinvestor.com, along with an article and a transcription. And of course for our Crux Club members, you get early access. And for those of you who haven't already done so, please click the button in the corner of the screen to subscribe to our YouTube channel. And of course, for more videos like this, click the notification bell. We spoke earlier today to James McDonald, CEO of Kootenay Silver. We've been wanting to talk to them for a while because we saw a huge jump in their share price in the middle of last year after a high-grade vein discovery at Columba, one of their core assets, along with Copalito. They are chasing these high-grade veins down there. They've done a bit of drilling, been held up by COVID apparently. Not much has changed in terms of the fundamentals of the company during the course of the last year. So we were kind of digging down to sort of try and understand what their business model is. And it seems that they are not planning to get into production. They are project explorers and developers. And there's a kind of cookie cutter approach that they'd like to follow. They have multiple assets to look at. Like lots discussed in there. He's quite a considered individual. Quite liked some of his answers. It seemed quite realistic. Take a look at in the description below at some of the topics we do discuss. Anything interests you in particular, click on the number beside it. That's a timestamp, and I'll jump you to that part of the video. Otherwise, do enjoy what James has to say. James, how are you doing, sir?
Good, Matt. How are you?
Yeah, not so bad. Not so bad. Glad to be speaking to you. Silver's a little bit topical at the moment, so delighted to kind of hear your story for the first time. Share it with the guys and gals here. What about you? You're on the farmstead. You were telling me earlier.
Yeah, I was telling you that. So we're sitting here during the COVID shutdown. I'm very fortunate to be on a family farm that was homesteaded in 1907 by my great-grandfather. So we're able to get out and stretch our legs and not have to worry about social distancing too much out here.
Very nice. Very nice, and lucky you. Yeah, we've been talking to a few folks down in Toronto and Vancouver, and they've got very different stories. But less of that. Why don't we kick off? Give us that 1 minute overview of the company, and then we'll pick it up from there.
Sure. Well, Kootenay Silver is an explorer in Mexico, focused primarily in Mexico and focused on silver exploration and development, discovery, obviously from the name. We also have project generation program going on where we're doing grassroots exploration, finding brand new properties all the time. We do a little work in British Columbia as well. And what Kootenay is really, we've got a very large asset base for a junior company, one of the largest in Mexico for a junior, over 144 million ounces silver equivalent measured indicated category, and 2 deposits. We have a third deposit in Mexico as well with no calculation on it. So this gives us a great optionality on the silver price, and you'll see that we trade closely to silver price. In addition to that, we are actively exploring 2 high-grade properties in Mexico, classic Mexican veins, Columba and Copalito. High-grade works in any silver environment, and of course the discovery of an economic high-grade deposit has a big impact on your value. So that's generating a lot of excitement currently, and away we go.
Beautiful. Okay, what I noticed when we're listening to you there, but also researching for this, there's a lot of moving parts here. So I'm really intrigued about what you're trying to build. What's the business plan here? I always ask the management team, I need to know there's a plan here, and it's not just drill. So can you explain what it is that the type of company that you are or want to be, what you're doing with all of these different moving parts, these different options, and maybe we can get into, how you're going to get there, but let's kick off with the business plan first.
Yeah, so the business plan is predicated on new discoveries. So we're looking to discover an economic deposit, mineable, in other words, a mineable asset. And silver, in the silver space, silver is finding good silver projects is really hard. There are very, very few of them. There are a lot less silver projects, good silver projects, than there are gold, for example. And that's why you see a lot of the so-called mid-size and senior silver producing companies actually moving into the gold space. And when you look at their mix of metal production, many of them over the last 8 years have become gold producers, in fact. And so what that means is that at certain points in time, i.e. when you enter into a real silver bull market or a silver producer needs to replace their reserves, those assets get a premium. And you'll see the silver companies trade at a premium compared to gold companies. So that's why we're focused on silver. Mm-hmm. So what our business plan basically is discover a mineable economic silver deposit, and then we will be looking to bring in a partner either to develop that, or we'll sell it to them if the price is
right. Good. So this kind of comes back to your kind of prospect generator roots from back in the day, right? So you are saying, if we track that closely to silver, because of the assets that we have and the type of business we want to be, you are reliant on the silver price, which is reasonably volatile. It's up and down, but when it's up, it's time to make hay. So I'm interested in how you do that. So when you talk about bringing people in, partners in, what are they? Strategic partners? Other silver producers? What is it that you're trying to do?
Well, so a couple of things there. You talk about the metal price. So any commodity, any resource is part in the industry is impacted by the price of that commodity. And of course, when you're in a bull market for that commodity, things are very good, and when you're bear, it's not so good. So we're focused on a couple of things. Our objective is to find an economic deposit. Now, not all deposits are not created equal. In other words, some work very well at a high metal price, and some don't. Some work very well at any metal price. And so we've, in the last 2 years, because of the low silver market we're in, there's been more and more opportunity arising to get into projects, those kind of projects at the exploration stage that, if successful, will work well at any metal price.
Well, explain that to me. I'm intrigued by that, but I can understand why high metal price things work. But you've said high metal price, some don't work, and at any, there's some models which work at any price. So what do you mean by that? What should we be looking for?
What that boils down to is the margin on production. And so you've got so many ounces per ton of rock in a given deposit. And you've got a fixed cost. So given the deposit type, it doesn't matter how many ounces are in that rock. You've got a certain cost that you're going to incur moving that 1 ton of rock, crushing it, processing it, extracting the metal, and that's kind of fixed. So if it costs you, let's say, for example, 3 ounces of silver per ton, or 90 grams per ton, if you prefer, then you better have more than 90 grams in your deposit. So high-grade deposits always work, and there's because of that, your margins are big. So even at a low metal price, you can make money. And to look at it a different way, let's say silver's, for simple math, $10 an ounce, and it costs you to move that 1 ton of rock, process it and everything else. Let's say it's an underground mine in Mexico. Let's call it $70 a ton. And so at $10 an ounce, you need 7 ounces, or about 210 grams, just to break even. If silver was $20 an ounce, you need half of that. But so your grade needs to be well over 200 grams, in other words, at $10, or over 105 grams at $20. So that's the impact. So, if your deposit's $250, it doesn't, or 250 grams, it doesn't work very well at $210 or 210 gram cost to move the rock. But if you've got, let's say, 500 grams in that deposit, and it's costing you 210 grams to mine it and process it, you've still got a lot of margin there. You're still making money at $10.
Sure. Everyone likes a bull market in any commodity. But you're describing the ideal project there, the one that the economics are so good, it's lowest quartile, and you can operate in any conditions over the cycles, right? But not too many of those around, and the ones that aren't too cheap if you wanted to buy them. So let's maybe talk about what you've got today, because like I said, there seems to be a lot of moving parts there. So do you want to kind of go through the projects and maybe look Columba first?
Yeah. So in that context, what we have 3 different deposits. 2 of them start to look interesting on a paper study at better than $20 silver.
And today we're at 1750-ish, right?
Yeah.
Okay.
That's right. So not quite there. There's things we could do to improve them, perhaps, but our money's better spent on those projects that we have that will work at 17 or will work at 12 or 13. And that's Columba. And it's also the other project we're drilling this year called Copalito. So we've got these 2. And why? Because of the grade we see in the veins there. They're both vein type deposits. And the grade potential at Columba looks fantastic. We got into Columba. It took over a year to negotiate the deal. We got introduced to it. It was owned by a private Mexican, and we went in and did 3 different trips, due diligence. There was historic mining there in 2 periods, like 1910 era. Quite a bit of extensive underground working was done. A shaft was sunk 6 levels. They went 200 meters deep. So they were obviously getting ready to mine that portion of that particular vein. And they got shut down by the revolution. And then in the late 1950s, some guys returned with some private money and tried to mine using that development. Probably 100,000 tons only were extracted. But what got us excited was looking at this old data. Nothing had been done since at least the 1980s there in terms of any sort of drilling, and it was minimal at best at that time. In this historic data, there's these old maps laying around. Well, not laying around, they're in boxes. So we dusted them off, looked at them. The data was very scant, but there was these sample maps of every one of these tunnels that was put in. And the grades there were ranging from 300 grams per ton, which is a decent underground grade, to almost 900 grams per ton, which is a fantastic underground grade. And this hadn't been drilled. So we couldn't, first of all, it was hard to believe those numbers, that this thing is sitting there with those sorts of grades and hasn't been drilled. And there's lots of reasons why that happened. And we could get into that, but it's a fairly lengthy discussion. It's mostly got to do with the mining laws in Mexico and how these concessions can get stuck in limbo for many, many years when taxes aren't paid, etc. So at any rate, we weren't able to re-enter that old mine because it was flooded. So we had to take a little bit of a chance, and we structured a deal such that we had a good 2 years without any significant size payments, so we could drill test it. And we accomplished that, in fact, the first year to confirm those grades. That we got in there last year, started drilling right within about 3 months after signing the deal. We put in 42 holes last year and 6,800 meters of drilling, and nicely confirmed those historic numbers. In drilling, we're getting numbers exceeding 1,000 kilograms, up to 2,000 grams or 1,000 grams up to 2,000 grams per ton. So 1 and 2 kilos in narrower intervals. And so what we're seeing there is that vein is very rich in grade. It's very consistent. We spread holes out over wide spaces between holes, 100 and 150 meters, which in a vein veins can be very variable, so you need a lot of density of drilling to get confidence. And so when you're stepping out that far and you're still getting continuity and grade continuity and vein continuity, it's really exciting to us because we know, okay, this thing is hanging together. It looks really good. So the stage we're at now is there's several veins on the property. So our follow-up to last year's program is go back in there, see how big this one particular vein in the historic area is going to get. This so-called what we would call an ore shoot potentially, and then at the same time move on to these other veins that we also drilled and also got some very good results in, and start to step off of those to see if we've got some size developing there. So there's numerous different veins in this project, well over 10 kilometers of strike length when you add them all together. That sort of scope tells us that we've got a property that could host 50 to 100 million ounces of silver here. And if you've got economic grades, that makes a real nice mine, and any silver producer would be very interested in wanting to have that asset. So the stage we're at now is still pretty early. We can see it's really coming together in that one vein. We need to go and establish that that's occurring on the others. And then the follow-up to that would be, okay, now you've got to get some drill density here, sufficient drill density, so enough drill holes to be able to have confidence on the continuity and grade and do your resource calculation. And then from there, you're doing your metallurgy in concert with that work. And so at the end of it, you can start to talk about a preliminary economic assessment that gives the first snapshot of what the economics of a potential mine may look like on the deposit that you've just defined.
Okay, so you've gone through a process there, and I understood. What's holding you back from advancing this? With a bit more pace to it, because if you've hit high grade, you're going through the usual process, and so it looks like you're going to do a PEA. And given the model you described earlier, what's your vision for how this thing plays out? At what point do you bring that partner in, or do you flip it over?
Well, it can happen. The most likely scenario is that we finish out this current program of 7,000 meters of drilling, which, of course, now we've been stalled with the current worldwide shutdown here of COVID-19. Now we're just beginning to restart again. So we'll still be able to finish our budgeted program probably by end of October here, 7,000 meters of drilling. That's going to give us a pretty good idea of the scope that this thing may be. Is it going to be 30 million ounces? Is there going to be anything there economic? Right now, it really looks that way, but we have to continue to prove that. Are we onto something that could be 100 million ounces? And if it's something that could approach that size, there's going to be a lot of buyers for it. And the way the industry is currently wired right now, if you will, is these companies tend to sit there and let the junior do as much work and eliminate as much risk as possible. So the things that you can help along the way to eliminate risk as you're defining the size of your resource, see if it's economic, is get onto those metallurgical studies, start some environmental baseline studies, start that work that leads to the initiation of the permitting, get your land access agreements in place, which we have. All of those things you need to be able to advance to mining. So we're doing all these things in the background at the same time. And those things help mining company pull the trigger and also add value to the asset at the end of
No,
the day.
I understand. I understand that, but what I'm trying to get out of you is, it's your decision making as well. So you're going through this process. There's a point at which, because it's wishful thinking otherwise to go, whether it's 50 million, 100 million ounces. You make decisions based on the data that comes back, and I'm saying,
Yeah.
what would the data need to look like to get you interested enough to actually say, right, I think we've done enough here. We've got a lot of other projects. I think that the most valuable point at which to exit is X. So what do you think that moment is?
Well, tricky question, because there's a lot of moving parts on the way.
Sure.
And so you're assessing a lot of variables that include the overall market, and the ability to raise capital, the metal price, quite a few things impact that. But probably just in a very basic approach would be, at that PEA level is a great place to pull the trigger, because now you've expended a significant number of dollars, but not a whole bunch. When you start moving beyond that, you get into feasibility study, pre-feasibility to feasibility. That could make sense too.
Right.
Proportionally, you wouldn't be spending that many more dollars. But after that, now you're going to be talking about construction, building a mine. And there you're getting into a lot of dollars. And unless your market cap is really appreciated, which in a bull market it can do, like my experience with Alamos Gold, which we put together in 2000, that project came on just at the perfect time. That was another company we bought at the bottom of the gold market, Alamos Gold. We bought this great asset, was out of the money. Gold market went for over 10 years after that. And the timing was so good that the stock appreciated so much, we were able to do equity financings all the way and build a $100 million mine and just keep going. So that's one of the variables. If you are in a scenario in a strong bull market and you've got a really good share price,
yeah, and it's better
money.
Yeah, it's a big part of where I'm going with this conversation, which is I used the phrase earlier. Silver price can be volatile. It's up around 1750 today. Some people think it's going to hit 20. I've seen some ludicrous. Well, I've seen some interesting quotes. People thinking it's going to hit 100. So lots of thoughts about where it's going, but what it's probably going to do quite in a short time frame is go back down again, because that's the way silver behaves. So how do you assess the cycle, the length of the cycle? You've got to have a view as a management team to say, look, we're probably not going to hit this cycle. Our projects are just too early, or we've just hit it right. Sound like Goldilocks and the Three Bears here. The timing is just right. So what's your assessment of Columba? Have you timed it right, or do you think it's just a little bit too early for this cycle?
Timing has got to do a lot with serendipity, because I'd hate to be an analyst and review my predictions every year.
That's horrific.
Yeah. But what we can look at is the length of time we've been in a bear market on silver. And we can look at the macro here. So we've been in a bear market since 2011, 2012. That's a long, long time. Gold has broken out of that bear market quite significantly. Silver hasn't yet, and it will. It always follows gold. And so what can change that? Well, silver's got quite an industrial demand component gold doesn't have. Silver also trades as a monetary asset, which is gold's primary use. And therefore, it's got this extra inelasticity due to that industrial demand and monetary demand. When those two converge, you get very explosive moves in silver. Like the last the last bull market, it went over $50 an ounce. And Pan American Silver had an asset called Alamo Dorado, which is pretty similar to our La Negra asset, but it was bigger. Same kind of grade, open pit potential, and they got that into production just as the silver bull market started. And they were doing 4 to 5 million ounces of silver a year there, and their cost was $7 or $8 an ounce silver, with silver trading from $30 to $50 an ounce. So they were free cash flowing 150, 200 million ounces a year off of one mine. So when you really hit it, these mines make a lot of money. That's why a junior company can get a real premium for a high margin mine.
Sure.
And
do you think you've got an asset which is going to hit this cycle? Because again, it just helps inform us about your thinking and where you think these assets are at and how quickly you think you can move or need to move.
So I think we're actually hitting it just right.
Okay.
I think we're on the verge of entering a serious silver bull market, and I think one that will last for quite some time in comparative terms, historically. And the reason is because of the macro. It looked like this was happening in January. We were setting up as far back as January. The gold market had certainly turned. But now with the COVID-19 pandemic and the global shutdown of economies and the massive amount of stimulus and money that the central banks have had to inject is never been seen before. And we know what happened last time in 2008 when that was done with the precious metals. And we're strongly believe that's going to happen again. It's going to be probably stronger because of the size of the stimulus this time. And so the setup is there, the macro is there. The length of the bear market for silver has been such that, it's due, just simply looking at at it on that basis.
Okay.
So I think the timing is really good.
Okay. How much cash have you got in the bank?
We've got, as of today, just over 6 million cash.
Right.
And our programs that we're running on both Columba and Copalito, which Copalito is another high-grade situation, we will exit the year with between 2 and 2.5 million if we do no other funding before that.
Okay, so you've got enough to drive this year's plans. I guess they've been slightly hampered by COVID, as you say, for Columba and Copalito. You're going to enter the new year with $2.5 million. You're probably going to need to raise some money at that point, but you'll know a lot more. So maybe let's talk about Copalito briefly, because you said it's another high-grade project, and maybe we can kind of bring those two stories together. So tell everyone about Copalito and what you think you've got there.
Sure. So Copalito is very similar to Columba. Columba is a classic high-grade Mexican vein system. In the case of Columba, it's very interesting geologically because it's almost entirely preserved. So you could teach classes there on that type of deposit because you can see it from its very top edge, which is really advantageous because it's barely been eroded. Copalito is the same kind of deposit type, high-grade Mexican vein system. We know it's more deeply eroded there because at surface we're getting a lot higher grades. At Columba, we got to get down the subsurface from the lowest elevations. Once we get a little bit deeper, we start to see the really good grades. But at Copalito, we see them right at surface. And what's amazing about Copalito is we're seeing these veins that are up to 15 meters wide there, right at surface. And we're getting grades like 1,066 gram per ton silver over 3 meters right at surface. We're getting gold up to 8 grams right at surface. And no sign of drilling at all. There's no historic records anywhere, locally no anecdotal stories about some company being there 15, 20 years ago, no sign of drill roads, nothing. as far as we can ascertain, it's never been drilled. And that is extremely unusual find. That project took about 3 years to put together. A lot of complications and land ownership and everything had to be straightened out. We were very patient, very calm, getting that done. And we finally got it done, put together, got the surface access agreements put together, and then started drilling this year, got one hole in, and we had to stop. So these are going to be the very first holes that ever gone into Copalito. We did announce that first hole. We got the assays back, and they matched nicely to what was at surface above the hole. It was a real nice grade. It wasn't a high grade, but we weren't in a high grade area. It was just, we had a sequence of holes planned out. And so really encouraged by that, because we got a lot of areas with truly high grades, more than kilogram of silver right at surface. And this project's a little bit different because it's got silver and gold, and it's got some base metal too. So it's going to be very interesting. There's a lot of veins there, 6 big ones that we can see at surface, that we can follow some of them for over 2 kilometers. So we've got enough sampling at surface. We know, based on our experience, some kind of resource there. Is it something that's going to be economic? What's the grade going to be? That's the big question.
Okay.
So that's what we're drilling.
Okay, so you've got 2 quite similar and quite nice projects. You've been slightly hampered in terms of the drilling, and you'd like to work on those obviously the rest of the year, and then kind of work out what you've got. Columba, you're talking about getting into the kind of PEA before making an assessment about how you move that forward. Is that the same with Copalito?
Yeah, so Copalito has never been drilled before, so not unlike Columba, but Columba we had that historic data.
Right.
So Copalito, we're starting from scratch. There's a little bit of artisanal mining there that was done a long time ago, no modern work. So we need a lot of drill holes. This first stage is just going to go in and see if the grades we see, those high grades at surface, we can find them subsurface. Then we're going to have to come in with a much bigger program.
Right. Okay. I'm just trying to see if there's a kind of cookie cutter approach to the way you think and the way you do things. Right. That's all I'm trying to do, because there's a very long list of assets. Some very, very green, and some you've got a bit more data on. So I'm just trying to see, as an organisation that I'd be investing into, again, what am I buying into? Is it the fact that you will continue to identify and prospect for new assets, and whilst working things up to a PEA stage, and then bring in partner, or as you say, possibly even flip it, or whatever your model is there, right, for commercialization of it. So is there a kind of machine process to this, or you just kind of make it up as you go along and make decisions as you go along? I mean, that's what I'm interested in understanding.
No, it's very much to use your vernacular, a machine process. It's a very systematic approach. Yeah, at the front end, very grassroots end, you're looking for good projects. We do that two ways. We're doing literal grassroots exploration, boots on the ground, and at the same time, we're looking at properties owned by others. And those two, one actually stimulates the other. And so then we're looking to acquire a certain type of project, one where we can see big upside, a lot of ounces, and those with good grades, high grade potential. Then when we see, if most of those projects will look for partners right away, because they're high risk, early stage, who knows what's going to happen. Sometimes you can't even, you're into something, but you don't see the target yet. But those properties where we walk on them, and they're rare, the Negra was one, Promontorio was one, La Ciguera, Columba's one, and Copalito's one. Where you walk on there, you do enough work, enough sampling, you see, and you say, okay, we already see enough here where we can see there's a very high likelihood of a resource, and you can have 90% confidence or something like that just with one drill program that you're going to have a resource. So that's big bang for your buck. Those ones we save for ourselves to drill, because for a bit of drill money, you can be onto a brand new discovery and really change the value of the company.
Okay, so again, because there's a lot of moving parts, it suggests that there's a lot of people, there's a lot of overhead. I mean, what's your G&A running at?
Yeah, so we probably run around with no drilling going on about 300,000 to 400,000 a quarter, with everybody working in the ground. We've got a full-time staff for the last 10 years in Mexico, and these are the guys that generate these opportunities. They found La Negra. They found the Columba project, found Copalito. We're very hands-on on the ground there in Mexico, and our staffs, we've got a great staff down there, great experience. They've really grown. We hired young guys out of university there and groomed them up to managers now, or one of our senior guys we hired him out of university. He's even negotiating the deals now for us. So these guys have really come into their own, very solid. We've got a great office manager down there, very tight control on funds and how we spend money, and negotiating our surface rights agreements and making sure we do smart deals. So we got some overhead there, but without that, you'd be everybody else running around just trying to find somebody with a property and do a deal with them, and then hire a consultant to do some work, and work sometimes, but not the best strategy.
No, I'm building a picture up of the type of company you are through this conversation. So you're not going to go out and buy a producer or near-term producer. You've no interest in that end of the scale. You would rather piece together projects from say grassroots stage. Again, it's fine. It's just people need to know what they're walking into if they investing in someone. Okay, so where's the sex and the sizzle come from for you, or is it just a slow, monotonous, regular machine like results? How do you get people excited about what you're doing?
The sex and the sizzle is in the discovery. So especially with Columba now, it looks like we're really on to a winner there. There's a lot of drilling to go yet, but the grades we're getting, the consistency there on that one particular vein, we start to see that in one or two other veins, and we're really onto something great. And Copalito, well, it's early days. We've got pretty high hopes for it too. And when you start to hit those things, that really can drive your market cap. The discovery is really exciting, and then the value you're adding to the company is really exciting.
Okay. The company wasn't doing much until the middle of last year, and then you had that high-grade vein discovery, and I think people have kind of paying attention to what you've got. But it hasn't really done much since then, has it? I mean, what's the next bit of excitement that people can look forward to?
Well, I'm not sure what you mean by haven't done much.
I'm looking at be clear. I'm looking at the share price since that discovery last year. It hasn't really done too much. Obviously, you've had the COVID V-shaped recovery, which is wonderful. But what do you think people need to be looking at? What do you think they're missing?
Well, say about a year ago, before we started drilling, we were at about a 14-cent share price. We spiked up to almost 40 cents last year. We came down this COVID all the way back down to 12, and then back up to 40. Now we backed off to 26, and on that chart you could see that strong possibility of that happening, just to fill that gap that was formed when it really jumped. So continued positive results is going to continue that uptrend on that stock for sure. If silver breaks out here, every time it trades above 18, we get a big pop in our stock. Breaks out 20 is a major barrier for the silver price. If it can break out and sustain that, we're probably into a bull market then. That'll be a driver, but the real driver is going to be those drill results coming out of Columba. If we get a second one in Copalito, then we're really lucky. That'd be great to have two, but one is going to be enough. Columba keeps hitting on all cylinders like it's doing, then we're going to continue to see that share price grow.
Okay, well, I guess that's what I'd be looking for, because your share price having a correlation to the price of silver does nothing for me, because it says the fundamentals of the company haven't changed or evolved or grown enough, and that's what I'm looking for too, and I'm sure you are, where we can get some of those drill results back. And so when is I'm trying to get an idea, what's your sense of the timing for being able to deliver that kind of news?
It's very near term. So our next numbers will be about mid-July, and then we'll continue to see numbers coming out with our drill program through probably the beginning of November. So we're going to have the next several months of pretty steady drill results coming.
Okay. You don't talk much to the market, it seems, because it was hard to find anything too much about you guys. So are you the silent, strong silent type, or have you got desires to actually talk to the market a little bit more? Because I think that seemed to be the message we were getting back when we were asking people for questions for you, is they want to hear from you more.
Well, I'd be interested in what markets you're talking to, because we'd like to talk to them. We do talk to quite a few markets. We have real big shareholder base out of Switzerland. We've been doing a lot of marketing through Europe, through some different mechanisms online here, through COVID here, a lot of one-on-one meetings. We attend the major shows, of course. The Sprott Conference is the next one, which is now going to be virtual. We were at the Zurich Gold Forum in April, which this time was virtual and actually worked quite well. And so in certain circles, we're pretty well known. So I'd really like to know about those markets that don't know us, and we can and figure out how to get to them, how to talk to them.
Okay. Well, I think that's a great first run through of your stories, new to us. We're hearing a lot of new stories this week, which is always good. I guess the next conversation will be even more interesting, because you'll have something positive to tell us, hopefully. We can sort of see if you've been delivering on your promises, and see what that does for the share price as well. And let's see what happens with silver. Exciting. The breakout, it's coming. You heard it here first. Okay, I love it. So what is your prediction for I always ask, it's like I say, it's a fool's game, but what do you think is going to happen with silver? When you talk about breakout, what does that mean for you?
Well, I think I think silver should be trading now between $25 and $30 an ounce already. And if it just went to its median line, historic, and that depends on what time frame you look at. You can only go back to 1971 when the gold window closed for that. And it looks like a cardiac arrest chart, the ratio gold to silver. Quite frankly, everybody says, well, the average should be 50, or it should be. Well, there's kind of a medium line around 60 somewhere, plus or minus. And when it shoots on the high side, right now it's historically high. And then when it goes the other way, it'll go as low as like 14. And when it goes the other way, it always overshoots that 60 line pretty significantly. And then it'll come back. So we're going to have a real strong bounce here in silver, like a real strong one. I don't know where it's going to go. Eric Sprott says $100. That's probably where you heard that. Yeah, he doesn't say that publicly too often, but occasionally. I think probably run for that $50 high again. We'll see it. I'll be surprised if we don't break it at some point. Just because of the macro dynamic this time. And when you adjust for inflation, we never broke it, the old high from the 80s last time either. So that could be a possibility. And if that happened, then maybe Eric's part's fairly accurate. I'd be surprised if that happened. Not shocked though. I'd be pleasantly surprised.
Pleasantly surprised. There we go.
But yeah, I think we're in for a pretty strong move here.
You focus on the fundamentals and let the market do its thing. I think that's the best way to approach these things.
That's all we can do. We have no control over that. We just can have opinions.
That's the right attitude. Well, look, James, thank you so much for today. I appreciate you telling the story to us and the watchers here. Pick up the phone when you've got something interesting to say. We'd love to hear from you again. Thank you.
You bet. Okay, Matt. Thanks a lot.